the merchandise was not up to mark, up to order. Now, so we gonna return to our purchases. We are gonna return to our suppliers. It is called purchase returns and allowances. So the amount of purchase returns we have made, if we have made, it is not necessary that each and every time we are having the purchase returns and allowances. If we are having the purchase returns allowance, then we have to put the value of over here. Now, if we have got any purchase discounts means the amount, if we have paid the amount of money within a stipulated time period, and we get some certain discounts over our purchases, it is called as purchase discount. If we have got any sort of purchase discount from our supplier because we have made prior payment before the completion, before the maturity of the time period, now we are going to put the amount of purchase discount over here. Then adding these two amounts, the amount of purchase returns and allowances and purchase discount, we are going to put over here the total of these two amounts over here. This amount will be deducted, will be subtracted from the gross purchases in order to get net purchases. Net purchases means the amount of purchases of merchandise after the deduction of purchase returns and allowances and purchase discounts. There is a vivid or categorical difference between the gross purchases and the net purchases. Gross purchases, again, I would say that it is those purchases, those purchases of merchandise prior the deduction of purchase returns and allowances and purchase discount. Net purchases means the amount of goods we have purchased after having deducted the purchase returns and allowance and purchase discounts. Then this does not end up over here. We are going to now add the transportation in. It is also called as carriage in. It is also called as freight in. These are alternative names of the transportation in. Transportation in means what amount of money, what amount of cost we have incurred in order to bring the same purchase merchandise to our business premises, or it is that amount of money which we have paid, which a businessman pays in order to bring the amount of the purchase merchandise from the point of purchase, that means the seller, or to our destination, to our business premises. What amount of money we have incurred in order to bring these purchases to our business premises, it is called as transportation in. It will be added up to the net purchases in order to gain delivered cost. Delivered cost means the total amount of money which we have incurred, which a businessman incurs, which a company incurs in order to bring the purchase merchandise from the supplier to our destination or to the businessman's destination. After having got the delivered cost, added up the merchandise inventory beginning to the delivered cost, now we will be getting the total cost of goods available for sale. It means that the amount, this would be the total amount, the cost of goods which lying for sale throughout the year. Now we are going to take some exemplary amounts to calculate the cost of goods available for sale. For example, we are having merchandise inventory beginning rupees 21,000. It means that when the accounting period was started, we were having merchandise inventory beginning rupees 21,000. It was the merchandise inventory ending for the previous year. The merchandise inventory which is left unsold in the preceding year, in the last year, will be treated as merchandise inventory beginning for the upcoming year, for the next year, for the succeeding year. Now we have assumed that when our accounting period was started, let's suppose January 1 of the current year, we were having merchandise inventory worth rupees 21,000 at the beginning of the accounting period. Now during this entire accounting period, we are going to look at how much amount of purchases we have made. For example, we have purchased rupees 80,000 of merchandise inventory from our supplier. It is a gross purchases because neither purchase returns allowance deducted nor purchase discount has been subtracted from this amount. Or in other words, gross purchases is the amount of gross purchases is that amount which is prior the deduction of purchase returns and allowance and purchase discount. Now, this is the total gross amount which needs some deductions if we have made purchase returns and we have got purchase discount. So we have assumed that the entire merchandise inventory we have purchased during this entire accounting period equal rupees 80,000. Then, of which we have returned 3,000 of goods, 3,000 of merchandise to our supplier because of defectiveness. It could be returned, the merchandise inventory could be returned for the defectiveness, or the merchandise was not up to the mark as per, does not meet the criteria for which we have paid as per our orders. So whatever the case may be, we have supposed that the purchase returns, in the entire accounting period we have returned 3,000 worth of merchandise to our supplier. This return of merchandise to the suppliers will be treated as purchases, returns, and allowances. Now, we have also got some discounts. Suppose we have got 2,000 rupees of purchase discount. Purchase discount means the discount we have availed discount. We have got discount because we have made payment within a stipulated time period. When early payment is made, we have got some discount, which is called as purchase discount. So we have got we have returned merchandise for rupees 3,000. We have got the discount, purchase discount for rupees 2,000, which makes 5,000. 3,000 plus 2,000 makes 5,000.